In June 2022, I shared why we should be buying the dip based on the EPS of the Nifty at that time and the growth that we were seeing. The current result season changed my view a little bit. We had the July to September 2022 result season, and the EPS of the Nifty hasn't moved much. So that is one of the main reasons for me to change my view. I'm not bearish on the market, but I'm not very bullish on the market to invest at the current levels. Yes, Indian market has outperformed the world. It is in the green for year to date or say 1 year time frame, whereas many markets are down even 30% year to date or in say last 1 year. Still, I think this is not the right time to be very optimistic on the Indian market. We should wait for 3 months. Let the February, in the month of February 2023, we will have the next quarter results out. That is the time to take the next big call. So my view is we should be keeping the powder dry and be ready to invest if market gives a correction. So let me share with you why I think like that. So for that we will head on to trend lines, Nifty EPS chart, and that will give us the idea of what I think and how it has been paying out. So let me first explain what this EPS chart is. The more pinkish line that you are seeing is the Nifty EPS. So in December 2021, the Nifty EPS was around 725-ish and Nifty was trading at around 17,500. So this is after one quarter. So in say March 2022, the Nifty EPS rose to 777. Then after that quarter, again in June or July, the Nifty 50 EPS rose to 808. And finally in June 2022, when I made that video, the EPS of Nifty 50 was around 837. So my understanding was the Nifty EPS would reach 900 by FY23 or in the current financial year, and in the next financial year it will be around 1000. So once it was around 1000, a 15 EPS to 18 PE ratio of Nifty is a good time to invest. But after the current result season, we see that there is not much movement in the Nifty EPS and it is only at around 840 rupees. So majority of the Nifty 50 companies couldn't increase their profit and there was a good sales growth, but the earnings didn't compound very well year on year for these companies. So then what happens is the Nifty EPS remained very close to 840 only. So now to reach to a 900 level, the next quarterly result has to do some wonders. It may be possible because world is going into a recession, so the commodity prices and other things will cool off, so there will be many companies who will be improving the profit margin. The sales have already improved and it can so happen that the EPS jumps a little. So till February we don't have any view on the market as such, neither bearish nor bullish, but we will wait for the EPS to rise. If the EPS doesn't rise in February, then we will be at 900 rupees or anywhere between 900 to 1000 rupees for FY24. And then what will happen is the current market price, the current Nifty levels of 18,000 is almost at 18 times if we are at 1000 EPS. But with 900 as the more conservative target, the Nifty is trading at 20 times, which is fully priced. So you don't get too much of a upside from here on. However, if the EPS jumps a little, you become a little more bullish. This is Nifty as well. However, in Nifty 50 itself, there are companies who have done a good profit growth, and then there are some companies who have not done that much good profit growth. So if you're considering to invest, you should be investing in company among your portfolio which has done good profit growth, because in this challenging environment, if they are able to generate good profit growth, you should consider them for investing, because once the scenario corrects or scenario becomes better, they will do even better. Do you invest based on the macro analysis? Macro analysis is when you are not analyzing the business itself, but you are analyzing the scenario and the environment where you want to invest in. If you aren't considering it for investing, this is the time you should start considering it, because it will help you give the bird's view of the companies that will do better and the companies that will not do as good as the others.